still the intractable issue of the Irish border, and we do see the talks descend into acrimony. Where do we go from here?
I think in terms of the broader outlook for the UK, I mean, we've clearly got the 31st of October deadline. Remains to be seen quite how Boris Johnson will kind of commit to his previous wording, but also respect the Ben Act and see how those are going to go. I mean, the number of iterations of how this could work out from a market perspective are gigantic. But we go back to the fact that do or die has become the key phrase linked to Boris Johnson's Brexit strategy, but it's no approach to asset allocation. And as a result, we are maintaining our underweight to UK assets, and where we do have exposure, we're exposed to the large multinationals which have that inbuilt currency hedge effectively by having dollar and euro earnings, and we're focusing on those above anything else. I mean, we've added into the unknowns the idea of a general election as well. That looks reasonably likely. If we do see an extension, there probably will be one before the end of the year. We've got 35 independent MPs sitting in Parliament at the moment. A lot of unprecedented numbers are flying around. So for us, the uncertainty is just so high. And we were mentioning just then the idea of the currency volatility. We expect the currency to remain the punching bag for that.
To the extent, Edward, that your clients want to hold cash, and I know a lot more investors have gone to cash in recent months. How much of it is in sterling?
So, I mean, a lot of the predominance of our UK clients are sterling investors. As a result, we do hold quite a lot of that there. But what we have started doing is we've started buying very short-dated US Treasuries to kind of have a bit of that, a bit of turn on our US dollar exposure. So we have started building that as well. But to give you some sort of context in terms of cash levels, for a medium risk investor, what we call balanced fund, that has around 8% in cash at the moment. So that's quite a high level of caution, and that's reflecting not only the Brexit fears, the Federal Reserve mismatch I mentioned earlier, but also a concern over the European economic situation.